TradingSim, the #1 market replay platform in the world, where you can learn to trade like a pro at your own pace.
Hey day traders, this is Al Hill from TradingSim.com. In today's video, we will be discussing my favorite setup, which is the Fibonacci Extension breakout in the morning. By far, my go-to pattern. It's what I look at daily. It's what I trade daily. I mean, it is my bread and butter. So in this example, so for today we have Health Insurance Innovations, and this is from August 1st, 2018 in the replay within TradingSim. So here, the first thing you want to do is when you see a stock breaking out, right? So this stock's up 8.42% in the morning. Let's hit play here just to get the tape moving. You want to look back at the most recent low to high swing point. You want to do a scan for that, right? This will likely give you your target for your extension, okay? So you select your Fibonacci extension tool, pick the high here, this guy right here. We come down to the low here. All right, bam, now we have it on our chart. And as you can see, HIIQ just exceeded its 1.618% extension. Now the 1.618 for me, a lot of times is where I look to get out, but on an opening breakout, right, you can look to get in here on this break, like literally right here. So just buy 100. Not going to worry about getting the exact entry there. All right, so you know, you can totally buy stocks in the open. That's something that I was pretty hesitant against when I first started out, but over time you get comfortable understanding the risk parameters, the volatility that you like to trade, and you can get a handle of it, trust me. So another key thing to look for is pre-market, right? So these are pre-market trades. You can kind of see how the stock is running into resistance in the pre-market here. Again, there's not a lot of volume in pre-market, but you want to keep an eye on it, right? The bars that are printing here, all these are pre-market bars, okay? So now we're in the trade, and look at the volume coming in here. All right, so your next question may be, well, why would you take this particular trade? There's likely dozens of stocks exceeding their 1.618% retracement. That's a great question. So what you also want to do when you're trading breakouts, you want to look at your higher time frame charts, okay? That could be 15 minute, 30 minute, an hour. It could be daily like this one, right? And so you can see our entry right here, okay? Now, you're going back on the daily. Look at this formation here, right? You come here, you draw your trend line here, okay? You see you're having a multi-month breakout. Do you see this? Now, whether it holds or not for the day, we don't care, right? We're day trading. But the point is, you have a multi-month breakout, which is going to increase the likelihood that the stock will go in your favor, okay? Let's zoom in on the action. Let's go back in. All right, let's fast forward a bit here. Now look at this, right? The next level up is the 2.618% extension at 39.08, okay? So you're getting into the midday. It's 11 o'clock here, right? Now you can make a call. For me, I never wait for a stock to hit the exact number. I assume something's going to happen. Whether it be short sellers come in and stifle the move, whether I somehow screwed up drawing the actual extension itself and I'm off by a hair or two, or I picked the wrong point, which can likely happen. We're not perfect. And when you get into these large ranges and you start getting to these bigger extensions, you know, accidentally selecting the wrong candle could mean the difference between an exit here or here, right? So you have to be very mindful of this. So don't get greedy, right? Just look to exit. Okay, we're at 1 o'clock. Stock still holding up. Nothing to report. Still holding up. Nothing to report. So this is where you want to probably just close out. Okay. Now, again, if you look at this, we're not up like 20%, but it's good money. But this is the beauty of this example, which I wanted to show you, is that let's say you sell out here, you're comfortable, okay, we're out. Well, guess what? You just had a multi-month breakout, and it looks like, let's fast forward here, it looks like it's going to hold, but there you go. So what do you think is going to happen the next day? We're probably going to go after this level here. So this is where you can start to build your own scans, right? So it's not just about every day looking at these tools, which are great, don't get me wrong, but you also start to have a pulse for the market. You actually know from either trading a stock or just observing what's in the market to know, hey, tomorrow, health insurance innovations is in play. No one needs to tell you that. You don't need any alert services. You don't need to subscribe to some very expensive scanner. And even if health insurance innovation does not show up on the top gainers list, you know it's a stock in play. Okay, so let's go to the next day. And look at that. Look at that. We're going right through the 2618. So where do you think the next target is? That's right. The 3618. So where do you think the next target is? That's right. Next level up. 3.618 extension. 4228. As we stated yesterday, do we wait till 4228? Nope. We're going to likely look to exit a little below. Okay? So let's say you go back in here again. You buy again. So look at this. On the open, what do we have here? We have the stock running up against the 4228, 3.618% retracement. So on a break of that, where do we think it's going? Likely 44.25. And are we going to wait until we get 44.25? Absolutely not. We're going to look to sell slightly beneath that, right? We're not going to get greedy. So what you can do here is put in the stop market order, 42.30, right? If it hits it, great. If it doesn't, whatever. This is how you play these levels. This is how you play this game. Okay, speed this up here a little bit. That's our order fills. Come back, we test this. All right, here we go. Now look, 44.25. We are at here, 44.30 as a high on this candle. So what do you think I'm going to do here? That's right. I'm out of this. That's it. That's it. This is how you use the levels. You look at bigger time frames to see if the stock is hitting multi-month, multi-week, multi-day resistance and breaking through. You look for how the stock is performing in the pre-market. You identify your extension levels. You buy the breaks of those levels. You place your stop below key low points and or the Fibonacci levels below. You have to assess your risk reward and you just work the levels. That's it. Now, I know this video feels really clean in terms of the setup working perfectly. If you scroll down further in the post on the site on TradingSim.com, you will actually see examples where Fibonacci will fail you, right? Because we don't want to just paint a rosy picture. That's where your stops come into play. That's where proper money management comes into play. But this here, I want to show you an example. Again, you can use the same stock and trade them throughout the week, right? You can start to build your own scans of what's in play. That's how you do it, folks. All right. Hope you like this video. Please subscribe or click like, and come on over to TradingSim.com to see how we can help you improve your trading. Thanks and good luck.
Please remember to like or share this video. To learn more about how TradingSim can help you become a profitable trader, please visit our site at TradingSim.com.